The Precious Metals Week in Review, July 10th, 2015. Brought to you by Precious Metals International. Volatility continued this week as the stock meltdown continued in China. The Greek situation continued to drag on in Europe, and a series of technical glitches in the US elevated fears among investors that the stock markets may be at the point of unraveling soon. The number of Americans filing initial claims for state unemployment assistance surged significantly higher by 15,000 claims last week, hitting 297,000 and reapproaching the 300,000 level closely watched by economists. The previous week's data was also revised higher by an additional 1,000 claims. Continuing claims, the number of people still receiving unemployment assistance after an initial week of aid also surged higher for the week ending June 27th, moving higher by 69,000. As global markets continue to be rocked by events in China and Greece, a surge in unemployment claims in the U.S. may mean that the U.S. Federal Reserve could put off any near-term rate hikes for 2015. Perhaps even pushing such a move out into 2016, since the Fed remains data dependent. On Wednesday, the New York Stock Exchange, NYSE, experienced a technical glitch that caused it to shut down all operations for nearly 4 hours. The glitch was apparently due to a software upgrade that went awry. Stocks continued to trade on other exchanges, but the fact that the glitch came on the heels of another one that caused a complete ground stop of all United Airlines flights around the world and sporadic outages of the Wall Street Journal's website around the same time led many to speculate on whether the exchange had fallen victim to a cyber attack. The NYSE reopened just in time for the usual market close on Wednesday afternoon and then appeared to open and operate normally on Thursday and Friday. Volatility in Chinese stock markets was massive this week as the rout continued. China saw its own version of the NYSE's trading halt this week, but the shutdown in China was intentional and not the result of a glitch. The government in Beijing also continued its efforts to shore up the rapidly dropping market, banning shareholders for selling large stakes in firms listed on the exchange. By the end of the week, Beijing's manipulations and interventions in the stock market appear to be having a positive effect. Chinese equities actually closed on a positive level for the week on Friday. As losses in the Chinese stock market collapse continued to mount early this week, another poorly performing economic sector in China took an additional blow as well. Chinese investors appear to be selling their real estate investments to cover their losses in the stock market. The state-run China Daily reported that several Shanghai-based real estate agents had noted that more apartments and villas had appeared on the market as the stock market continued its collapse. Gui Aijun, a real estate agent at Shanghai Junda Property Services, told the paper that at least 4 of his clients were urgently selling their homes after taking losses in the stock market. Mr. Aijun said, "Some investors sold their stocks to buy properties in March and April, but now we see people selling properties after piling up losses in the stock market." China's property market has been a key area of concern within a sluggish economy, and rush sales of homes and properties at depressed prices will likely do quite a bit of additional harm to the struggling real estate sector in China. There may be an additional shock awaiting the Chinese real estate market as a result of the stock crash. On July 5th, China's securities regulator announced that real estate had become an acceptable form of collateral for stock traders who trade on margin. If these investors borrowed stock from banks, using property as collateral after the announcement, the collapse of the stock market may mean that there are many pieces of property that suddenly became bank-owned when stock investors failed to meet their margin calls. The standoff between Greece and its creditors reached fever pitch this week following a no vote on Sunday in a referendum put to the Greek people on the most recent set of reforms proposed by those same creditors. Greece had until Thursday to submit its counterproposal of reforms to its international lenders, commonly referred to as a troika, so that Eurozone leaders could begin to review them prior to yet another meeting in Brussels over the weekend. Late on Thursday, Athens finally managed to meet one of its deadlines and submitted a new set of reform proposals that were remarkably similar to the very ones proposed by the Troika last week, which the Greek people had just rejected in the referendum over the weekend. The Greek parliament is set to vote late on Friday on the new reforms, and Eurozone finance ministers will meet on Saturday to decide on whether to proceed with negotiations on yet another bailout program for Greece. Along with its latest list of reforms, Greece has asked for another 53.5 billion euros to help cover its debt until 2018. In other words, regardless of the outcome this weekend, Greece simply cannot survive without another bailout. As China and Greece cornered the news market this week, British government advised all United Kingdom tourists in Tunisia to leave the country because another terrorist attack is highly likely. British Foreign Secretary Philip Hammond said, "While we do not have any information suggesting a specific or imminent threat since the attack in Sousse on June 26, the intelligence and threat picture has developed considerably, leading us to the view that a further terrorist attack is highly likely." Brent crude oil dropped back below $60 a barrel this week as markets became more fearful over the state of the economies of China and Europe. If China's economy continues to slow, and the fallout from the situation in Greece is not priced in, as analysts expect, then global demand for oil could drop again, leading to additional downward pressure on oil prices. The euro began the week with a near vertical drop against the US dollar as Sunday came and went with no resolution to the crisis in Greece. The battered currency tried to regain some ground, but found heavy selling pressure late on Monday that sent it to fresh lows against the dollar. The euro found a bottom about midday on Tuesday and began moving higher. On Thursday, as the situation in Greece continued to wear on, the euro began dropping once again. Late Thursday saw a turnaround for the euro, which continued into Friday, and it now appears set to close the week slightly higher against the US dollar. The Japanese yen spiked higher to start the week, but soon began retracting the move. By Tuesday, the yen began moving higher against the dollar, but also saw a sell-off begin on Thursday as the world awaited an update on the situation in Greece. Friday saw a continued decline in the yen, and it appears set to close the week even or slightly higher against the US dollar for the week. Volatility should be expected to continue as Greece and its international creditors continue their negotiations through the weekend once again. Russian President Vladimir Putin stepped into the fray on Friday as he criticized the US's own debt levels and defended Greece. Mr. Putin, speaking at a news conference after the Shanghai Cooperation Organization summit in Ufa, Russia, said, "The U.S. debt level is a serious problem, not just for the United States, but for the whole world economy. Debt exceeds gross domestic product there." When questioned on Greece, Mr. Putin said, "Russia, of course, is able to offer help to its partners regardless of today's difficulties with the economy. We're helping some countries. Greece is a European Union country and within its obligations is conducting rather difficult negotiations with its partners. Mr. Tsipras hasn't approached us regarding aid, and that's generally understandable because the numbers are big and we know what's at stake." The market seemed to take the news that Athens had submitted a new set of reforms to the Troika as fantastic news, ignoring the fact that the drama is not anywhere near over. Late Friday, the Greek parliament will have to approve the reforms. Saturday, the Eurozone finance ministers will have to approve the reforms and decide whether to provide Greece with additional funding. If the finance ministers approve the reforms list on Saturday, then the European Union leaders will hold a meeting on Sunday regarding how to proceed with setting up any additional aid for Athens. On top of the aforementioned items, parliaments across the Eurozone will also have to approve not only the reforms list, but any new funding package for Greece. In other words, there is no way that the situation in Greece gets resolved over the weekend. There are simply too many entities involved. Even if the reforms are approved by all involved over the weekend, it is unlikely that Greek banks will receive the emergency funding they will need in order to open the doors on Monday. Even if Greek banks do manage to open the doors next week, there is still an extremely high likelihood that they will see massive bank runs as the Greek citizens rush to withdraw as much money as they can amid the heightened uncertainty they are currently living under. In a slew of technical glitches this week, mostly occurring on Wednesday, several key systems were shut down unexpectedly, grinding to a halt. Wednesday morning, United Airlines experienced an outage involving a key piece of network hardware, which brought all flights to a halt as an immediate ground stop went into effect. Later Wednesday, a software update at the New York Stock Exchange NYSE went awry and resulted in the NYSE shutting down its entire operation for nearly 4 hours. Coinciding with the shutdown of the NYSE, the Wall Street Journal's website was also knocked offline, possibly because of a surge in increased traffic to the site as a result of the NYSE outage. U.S. officials were quick to announce that the incidents were not the result of a cyber attack. If the NYSE had any sort of disaster recovery plan in place, it clearly did not function as expected, since the exchange, which supposedly has backup operations in place and standing by for just such an emergency situation as the one that materialized on Wednesday, failed to transition to those backup systems. One other event seemed to escape the news on Wednesday, at least in the U.S. Amid all of the other activity, the U.S. Mint suspended sales of its 2015 American Silver Eagle coins on Wednesday, citing a significant increase in demand. It would seem that the accumulation of physical precious metals as part of a well-diversified investment strategy has once again picked up pace, even as pressure was put on prices this week, most likely as a result of the uncertainty in global stock markets. As we enter the weekend under the threat of continued uncertainty in Greece once again, it continues to be important to monitor global news outlets for events that could send precious metals prices higher from here. The parliament in Greece is not expected to vote on the latest set of reforms until 3 a.m. local time in Athens Saturday morning, due to some sort of unspecified procedural difficulty. China, despite a surprisingly positive finish in its stock markets for the week, remains an enigma as the result of heavy and direct government intervention in an attempt to stop the market from plummeting further. China's stocks will also remain important to monitor as their market reopens on what will be Sunday night in New York. Remember that precious metals should always be viewed as a long-term investment, and that the key to profitability through the ownership of physical precious metals is to actually acquire and own the physical products and to hold them for the long term. Always remember that you should never overextend your ability to maintain ownership of your precious metals over the long term. The Precious Metals Week in Review, July 10th, 2015. Brought to you by Precious Metals International.